I'd like to start today's video by saying I believe in AMC. As a company, it's the titan of its industry, the heart of American culture, and I believe long term with popcorn sales and NFTs that the company will become profitable. That said, this is my journal, so I am simply documenting what my thoughts, feelings, and trades are. I'm not here to pander to anyone. I'm not here to confirm any bias. I'm simply documenting my thoughts and feelings. Starting today's analysis with a 1-minute chart, you're going to see a vertical dashed line. This is market open, and as you can see, the price opened much higher than it closed yesterday. This is a gap up. We surpassed the $29 level and the monthly VWAP. This is optimistic. Now the price did start to slide, and this typically would mean that this gap would fill. The price would continue to fall until we reach the closing of the day prior, and that's not what we saw. The price opened higher and then slid but bounced, and it ran up until we encountered the December 2nd high at 31.22. Here's our first pipe top of the day. And I just want to pull up the RSI and show what's going on there. The RSI did reach the overbought level. As the price continued to move up against this 31.22 December 2nd high, the RSI continues to reach that overbought level. But as you can see, it never really surpasses it. Over and over and over again. There is a lot of resistance at this level. And eventually the price sold off prior to market close and then did not rise above 31.22 before ending the day today. This is a significant level of resistance at $31.50, and I'll explain why as I move through my charts. This is my current 15-minute chart drawing. It's a descending broadening formation, and you'll see that in yellow. This top trend line here is just about at $31.20. And as you can see, today's price action hugged that line quite a bit, and we failed to close above it, closing at $31.04. This is a big deal. Not closing above that line would mean that the breakout to the upside is less likely to happen. What we should have seen, should the price have broken out, was a clean breakout on volume and an attempt to reach this $35 level. And that's just not what we saw. We saw the price rise, hit this overhead resistance, and stop. It hit the ceiling and stopped. That's not what a healthy bull run looks like. We were up 8% on the day, but most of that run occurred in pre-market trading and not during normal market hours. You're gonna see some red lines as well. And these are the 61.8% and the 70% retracement levels. And this is where I get really bearish. Because the price didn't break out above our descending broadening formation today and respected the 70% retracement level, I believe that we will see the completion of a measured move down. And it's a big measured move down. It's gonna start with a sell-off that would lead to, well, initially, it's going to start by a return to the monthly VWAP, a moderate dip. After testing the monthly VWAP, the price may continue to drop, and it's possible that the monthly VWAP will drop with the price as well. The lower target for this broadening ascending formation is $20.36, and I really feel strongly that we're going to find that price target this week. Now I'm going to show you where these retracement levels come from. This is my 1-day chart all zoomed out, and I do this just to give you a little bit of context. Let's talk about where we are. Big nosedive, right? And then we saw this big jump up today, and this looks really good. This looks really optimistic. I want to show you though how this could prove to not be all that great. In a prior video, I said I'm going to look at any candle that does not reach this $35 level with a lot of suspicion. And there was a reason for that. I'm going to reveal that now. I'm going to turn on my 15-minute drawings here over my daily chart. And I do this because this is the most clear way to visualize this. So I took the last minor high. It's not the last minor high, but it is the most significant minor high here at around $45.95. Since that time, the price has dropped and not exceeded that level. This looks like a measured move down, okay? And I have some information here pulled up on the right about measured move down retracements, and I encourage you to go onto Bukowski's website, thepatternsight.com, to review that information for yourself. I'm gonna quickly navigate to the index and select measured move down to show you what I'm looking at. There is a small diagram here on the right, and what I'm essentially saying is that this move from 45.95 down to this low of 26.85 is the first leg of the measured move down. In this scenario, as the price drops, there is a rebound to the 70% retracement level. And this is exactly what we're looking for in this chart pattern. Okay, here we go, the corrective phase. The computer algorithm to find these patterns looks for retraces of at least 70%. Those lead to the best measured rule performance. And now we have another diagram, and you can see points A, B, and C. Essentially, what it appears to me is that the price is currently at point C, the end of the corrective phase, where the price has bounced and retraced to that 70% level and is getting ready to fall again. Now, the measured move down implies that the second wave down, the second leg, will be as great as the first. And to go from 45 to 26 would imply another $20 drop, which would be $5. Okay, that's a lot. That's really low. Now, talking about the measured move down, Bolkowski talks about how many patterns he analyzed, right? He said the above numbers are based on more than 950 perfect trades. That means that in order to gain this statistical analysis, Bolkowski had to use software to analyze 950 different patterns over different time frames, different stocks, and this is what he got. And when we're talking about technical analysis, this is really what we're talking about, are statistical probabilities that are derived from an enormous sample set. If you're taking one stock, studying its past behavior, and then trying to predict what it's going to do in the future, that's not technical analysis because it lacks that sample pool to derive a reliable statistical analysis. Bolkowski always shares how many chart patterns he found over how many decades he studied it, and I think that is really valuable. There's a lot of value in following someone who has decades of market experience and a proven portfolio. Here's an example of the measured move down on Bolkowski's website, and you can see there are labels here A, B, C, D, and E. I believe we are at point C, and we are about to move down to point D. And the reason why I think that is because the fair or realistic value of AMC stock is not as high as it is. A fundamental analysis reveals that the company's in debt. Had AMC been given the opportunity to sell more shares, it could have become debt-free like GameStop, but that's not the situation. And unlike GameStop, AMC has yet to become profitable. I would like to finish this video by saying I really hope that everyone is prepared and trading responsibly should the worst occur. Currently, and I'm gonna do this every day now, currently I'm holding puts. I did close 2 put positions because they expire this week, and anything expiring out of the money just needs to be sold off. I'm holding December 10th, $26 and $31 puts. Each is down just a couple of dollars currently, but I expect to see these to run into the money as early as tomorrow. If the price rises above that 70% retracement, that is a huge signal that potential upside may be seen. But if we see a drop tomorrow, the measured move down may begin to play out, and it's very important to be prepared for anything.